Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Thursday. It is March 6th? Is that right? Is it already?
The 9th.
Where does the time go? 800-951-0592. allamericangold.com is the website. I guess the day after Jay Powell spent the last 2 days trying to forget that he ever said the words disinflation. We've got jobs, jobless claims. We got jobless claims today. Tomorrow we get the jobs number. I don't know. We're going to get a Fed rate hike next Wednesday. I don't know right now. I'm going to say 1/4 point, but I think a lot will depend on tomorrow's jobs number. If we get another one of these outrageous numbers, maybe we'll see 50 basis points. I don't know what's going on with gasoline. I don't know if it's an Arizona thing. We started out last week. Gas had gone from $3.59 to $3.79. And then early this week, it went to $3.99. This morning, I'm driving to work, and it's now $4.19. Of course, $4.19.9. Come on. $4.20 a gallon. We knew that the winter was going to be the cheaper energy prices. But Jason, at least for right now, and again, I don't see anything. It's not like inventories have been horrible or things like that. But already gas, at least here in Arizona, back above $4 a gallon, doesn't really bode well for the disinflation talk.
No, Joe. And if we got March gas prices there, then what's July or June gas prices, August gas prices going to be, right? Because even without what's going on with the inflation and the markets that we've been having over the last 2 years, I mean, if you have $4.19 now, what is July going to be within it? And then we're going to have lots of inflation still in July. So what is that going to be? And then geopolitically, you sprinkle some of that in, you could have $6 by this summer, Joe. I mean, it just doesn't take very much, does it?
Yeah, I mean, historically, you would say, hey, add at least $1. But we'll see. Again, I haven't seen the reason for it as far as in the inventory numbers that have been coming out. Like this week, we had a crude draw. We did have a little bit of a gasoline draw, but crude stockpiles have been way up until this last week. So now, granted, they were at very, very low levels. We obviously haven't refilled the strategic oil reserve. My guess is, and this is just me guessing, is some of these refiners are probably down for routine maintenance in those crack spreads. And again, you talk about premiums. We know this. I'll give you the best example I can. Remember silver last year and how expensive silver was? You had a spot price of $18, yet silver eagles were $36. That I think we got a very similar thing happening in gasoline right now, which is, hey, I know the barrel of oil is, in the high, let's say high 70s, which would mean, hey, we probably shouldn't have this high a gas price, but the supply and demand, right, Jason? I mean, it just boils down to that. Hey, we're going to make this much gasoline, and everybody wants it, and therefore all of a sudden the premiums go up.
Yeah. There's any number of factors cause the price of any item to go up, and so I like your idea of premiums because what does it take to get it there, right? It's not just the commodity itself. When it comes to the gas pump, it's different than what are the bids on barrels of oil from the producer. Getting gas into your car is a whole different animal. You got to take it from the barrel and produce it and bring it. And Joe, we talked briefly before the show about this. I mean, the cost just to get it to the pump is probably going up just like everything else.
Yeah, exactly. Yeah. And again, all these special charges and all this stuff, you can just guarantee all of this is getting passed on to the consumer. On the jobs front, we did get a jump in jobless claims. We get this every Thursday. It was up 21,000. Now, we're at historically low levels. So the 21,000 brought the number to 211,000. This is the highest number going back to December. So this is the highest number of 2023. But a little perspective here. That is still a very low number. Yes, it's up from the high 180s, low 190s, but still a low number. But then Challenger Gray in Christmas, for those of you that know them, they track all the mass layoffs. So these are things where every state has laws where if you're going to lay off X amount of employees, you need to tell us ahead of time. You need to give us 30 days notice that the layoffs are going to be coming. Challenger Gray and Christmas said planned layoffs announced 77,770 for the month of February. That's a February number. That was 410% higher than the same time last year when only 15,000 planned layoffs. By the way, for February, this is the highest planned layoff for a February since 2009. So going back to 2009, we'll see. It's only 1 month, but maybe it's starting to pick up here. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason on this Thursday. The Dow is up 40 points. It's been tough week for the Dow. We'll see if they can finish in positive territory here. The S&P is up 8. The NASDAQ is up 40. Gold's up 15, 1834. Silver's up 5 cents, $20.05. The 10-year note sitting at 398. This market recap brought to you by our friends over at YRefi. We keep telling you, hey, have that gold, have that silver put away. Maybe you want some of that other money. Maybe you got an IRA that you're like, man, gosh, I just hate that it's in Wall Street and I want to do something with it. You can get up to 10.25% return, not correlated to Wall Street. Matter of fact, YRefi did not care about Challenger Gray and Christmas today. They didn't care about the jobless claims. Matter of fact, they won't care about the jobs number that comes out tomorrow, or any words that Jay Powell may try to invent in his next press conference next week. YRefi won't care. You know exactly what your statement's going to look like month after month after month. Check them out. InvestYRefi.com. The word invest, the letter Y, REFY.com, or 888-YRefi24. 888-YRefi24. Remember, you got to have at least $50,000 to invest at YRefi. And Jason, we're watching all of this play out. Challenger Gray and Christmas now, so we're 2 months in. 180,713 planned layoffs, up 427% from last year. So planned layoffs last year, about 34,000. This year, 180. By the way, that is the highest January and February since 2009. So this will happen. I don't know when it's going to happen. I have a bad feeling that when it does, it'll really go quickly. The problem is I think we've got more months, Jason, of this slow grind, right? The data is just getting a little worse. Obviously, planned layoffs way up, but we haven't really seen it go through more jobless claims, right? We definitely haven't seen it in the jobs number. Yesterday, ADP, 243,000. Tomorrow we'll get the government's number. And nobody, put it this way, nobody's expecting a big negative number. Matter of fact, everyone's like kind of getting their fingers crossed, saying, please, please, please don't be more than 250,000, because otherwise Jay Powell's going to look even like a bigger idiot than he already looks like.
And I don't know if it will matter. We talked about this also before the show. I don't know if it matters. I really think Jerome Powell wants that quarter point. He wants to make everyone seem like everything is okay. Everything's smooth sailing, right, Joe? Everything's fine. Everybody, don't look at the man behind the curtain. In fact, don't look at me at all. I think he almost doesn't want anyone to see him.
Don't look at me. Stop looking at me. Don't touch me.
Don't look at me.
Quit touching your brother.
And so but yeah, we'll see. We'll see what the number will be and how big of a deal the news makes it. And but
they've got the right patsies all in place, don't they? They've got Joe Biden. They've got Jerome Powell. By the way, yesterday we talked about the new tax on people making $400,000 or more to try to save Medicare. Today, the Biden administration announcing more tax. Get ready. Listen, you know what? I'm going to give you my son's number as well, because there's so many things coming at us now. You better have your portfolio, especially if you're like me, you're in your early 50s, maybe getting into your 60s. You better have your tax house in order. Here's Joey's number, 602-909-9048. You are going to need it. Now a new billionaire tax. They're going to say that the minimum tax on a billionaire is going to be 25%. A lot of billionaires are able to have that number way down near zero by investing, right? By creating jobs, by spending money to put other people to work. And you can argue the pros and cons of it. Listen, Jason, I was the first to say there should be no income tax, period. But that's a different show. A minimum 25% tax there. People making over 400,000. Why is the whole country now starting to feel like California? They want to raise the taxes there. The new tax rate, they want to go to 39.6. 39. You're going to take 40% of your income if you're making 400,000. I mean, dude, 400,000 is not that much. I'm sorry. Listen. I don't want to minimize it. It's still a lot of money, but 400,000 isn't as much as people think anymore.
No, and when you say they're going to tax billionaires more, how are they going to accomplish such a thing? They earn their money differently than the guy working the 9 to 5, right? So how do you get a tax 25%? What does that number even mean? Especially like Donald Trump, all his stuff is in debt instruments. He almost has no income. Right? What does that mean?
And that's the thing with the billionaires. It's hard to define, right? Hey, I'm a billionaire, but that doesn't mean that I made $1 billion this year, right? And normally that's not the case. So it's going to be interesting. Who knows? Additionally, wants to raise income levies on corporations and billionaires again. Here's the problem. There's not that many billionaires. There isn't. As a matter of fact, if Wall Street does what I think it's going to do by the end of this year, there's going to be even less of them. The budget would set corporate tax rate at 28%. Oh, boy. That's not good for Wall Street. Well below the 35% that they were trying for in the 2017 tax law. Well, I think, what are we at, 21%? And I think they're trying. Remember Janet Yellen trying to get all the world to say, let's have a minimum of 15%. And now all of a sudden, wait, what happened to that? I mean, that's almost double the 15% that they were talking about. And again, here's the good news. I don't know that how much of this would even get through. But here's the problem, Jason. This just tells you they already know this deficit is going to skyrocket. It truly is going to skyrocket in all these years. Think about this. We went through about 50 years of spend, and lowering taxes. Right? Any idiot can tell you that's not a recipe, long-term recipe for success. And right at the worst time, we're going to need to stop spending and raise taxes. And at a time when interest rates are going to go a lot higher than people think. This is why most people are saying, hey, listen, it's just a matter of time before they break it.
And for the average guy that's listening, when you hear corporate tax going up, and it's just such a popular thing for the average person thinking, well, yeah, Walmart needs to pay more. Why should I pay it? Well, you are paying it. The corporate tax is the stupidest tax. And if people should really understand that corporations don't pay taxes. They just don't. There's no taxes. You think Walmart gets, let's just say their corporate tax goes from 15 to 30%, or it goes to 50%. What does any business do? They get all their expenses, they put it up in a big pile, and then they charge their goods and services accordingly. So when the corporate tax goes to 50%, you pay it. You buying
go to
anything
Walmart,
from any store anywhere, you pay it.
Right. When you go, why are things so expensive? Well, there you go. Well, you know what? They just raised our taxes by 20%. So you're gonna cover that cost for us. That's just simply how it works. And when things are going from bad to worse, why is gold up today? Gold shouldn't be up today. Shouldn't be. Right? We got a rate hike coming on Wednesday, and when we're debating whether or not there may go from 25 to 50. That's bad. Why? But why is it up? Well, I think I may know. I mean, we talked about what was it? Singapore. We talked about China. We talked about all these central bank gold buying. This morning, Credit Suisse. Boy, we've been mentioning this bank way too many times. Another problem. They got a notice and will not be filing their annual report, their 2022 annual report from the SEC. The SEC apparently sent notice to Credit Suisse, and they are going to delay the filing. The comments are a technical assessment of previously disclosed revisions. The consolidated cash flow statement. Whoops. Houston, we have a problem, right? No cash flow. That's like, can you imagine, right? That's like hey, we're going to send the rocket into space, and all of a sudden, whoops, someone forgot to put the fuel in, right? Yeah, we got a problem here. And apparently the SEC saying, hey, wait a minute. We've got a problem with your cash flow statements because you know what? We're just, doing the math. Something doesn't quite add up. And here's the thing. Credit Suisse, we know, all-time record low, a new all-time record low on their stock price, somewhere around $2 a share right now with Credit Suisse. And Jason, this is something where it's going to be very, very interesting how this plays out. We know for months now, the billionaires have been pulling money out of Credit Suisse. My thoughts are a bunch of major corporations who were banking at Credit Suisse have done the same, because they're talking about losses now in the tens of billions of dollars. And Jason, banks don't have that kind of money. That's the thing. You can have 1 year and you lose $3 or $4 billion. You can't go multiple years where you're losing $3, $5, $7, $10 billion. They don't have that kind of cash.
Right, Joe. Right. And always just things like this, bank weakness of this level. It makes me wonder if Credit Suisse was one of those banks that was having trouble in 2019, right? The repo market that was going upside down, right?
They absolutely were. So I'm so glad you brought that up, because in this release, when they're talking about cash flow at Credit Suisse, they're talking about statements in the years ending December 31st, 2020 and 2019, as well as all current years in related controls. So that tells you that Credit Suisse may have been massaging their cash flow numbers to mislead people into thinking they were healthier than what they actually were. And we know this for a fact, that in 2022, Credit Suisse had a full year loss of over $7 billion. And we also know for a fact that Credit Suisse was in serious breach of its supervisory obligations, and actually had an issue where they broke all the new laws that they put into place as far as you're supposed to protect us. Here's the problem. If Credit Suisse is forced into some kind of a bankruptcy, all of those off-balance sheet things would have to hit the market. I don't think they can afford to do it, because we all know they're not worth what they say. My guess is, this is my guess, they're going to try to do a Bear Stearns with Credit Suisse. In other words, have somebody else buy them so this off-balance sheet stuff doesn't hit the markets. Because if it does, this whole thing unwinds. We'll have to wait and see. We'll be back.